I bet today is the 29th of March. Simply just going to be doing a weekly review for the week of the 23rd all throughout the 27th of March. So, taking a look at the weekly time frame here on the Nasdaq, we have the previous week's range. So we have the previous week low, equilibrium, previous week high. And what we take a notice to is that we have the weekly opening right here, and then we have that deliverance up towards buy side, delivering into a premium of that previous week's range, so above the equilibrium, and then we have that sell side deliverance engaging with this weekly imbalance that resides right here. And then taking a look at the daily, so we have the previous week's range, previous week high, equilibrium, previous week low. We have the weekly opening right here, and what we see is that deliverance up into a premium of the previous week's range. And on the daily, we have the engagement with this order block right here, deeming this an order block because we have the series of up close candles engaging with this SIBI right here. And then we have those series of down close candles confirming this to be an order block. Monday, utilizing this order block as well as delivering up above the equilibrium of the previous week's range. And then we have Tuesday and Wednesday simply being inside days, so their price action is within the range of the Monday deliverance. So simply a consolidation occurred during this segment of price action here during the Tuesday, Wednesday trading. And then we have that Thursday, Friday expansion down towards sell side. And with the Thursday closure, what we end up doing is forming a propulsion block, and Friday ends up utilizing that propulsion block to deliver down towards sell side. Now, propulsion blocks as a PD array are very sensitive. We end up seeing how Friday utilizes the propulsion block for that deliverance down towards sell side in an expansive manner. Now, propulsion blocks are simply just part of the order block family, but the formation of a propulsion block is simply just the engagement with an order block. So Monday being our propulsion block, Monday is the candle that delivered into this order block right here, and then we have the closure below that Monday's candle opening, and that is what makes this a propulsion block. And we end up seeing Friday utilizing it for that deliverance down towards sell side. But not only is Friday utilizing the propulsion block, it's also utilizing the weekly opening, because Monday is also where our weekly opening is. So beside it being a propulsion block, it is also our new week opening gap. And lastly, not only is Friday utilizing the new week opening gap and the propulsion block, it is also utilizing the previous week lows. So we can see that Friday's price action comes and engages with the previous week low before we end up having that deliverance down towards sell side to engage with our August low of the month and the monthly BISI high, which were projected and within the range of the standard deviation projected out on the daily. So from this high all the way down to this low, we have the -2, -2.5, in which we have the August low of the month and the monthly BISI residing within it. So moving forward and taking a look at the hour 4, we have the previous week's range, so previous week high, equilibrium, previous week low. We have the weekly opening right here, and we have that deliverance up towards buy side engaging with the daily order block. So it would be this segment of price action here, which would be your daily order block. And what we take a notice to is on the hour 4, we end up having an offset reaccumulation of orders. So the engagement with this high would be deemed an offset reaccumulation of orders. So here we have the engagement with this high right here, deeming this an offset reaccumulation of orders within a premium of the range. And then we have this Tuesday, Wednesday price action in which we end up seeing that consolidation occurring at. But during that Wednesday price action, a Kraken correlation presents itself in order for us to project a standard deviation for sell side, projecting the -2, -2.5 for the low of the week, which was Monday at the time, as well as the new week opening gap as well. And then we also have the -4, -4.5 projecting for the event horizon between the August low of the month and the monthly BISI high. Event horizon is simply just being the midpoint between any two PD arrays or any two levels. So in this case, it'd be two pools of sell side, because the monthly BISI high would be its own respective form of sell side liquidity as well. And then you have the August low of the month, which is its own respective sell side liquidity as well. Now, the range between the two, the midpoint would be considered your event horizon. So we have that deliverance during the Thursday's trading in forming a new low of the week, and then we have a consolidation around the weekly opening as well as our daily propulsion block during the Friday's trading. So we have Friday's trading opening up on this candle right here, deliverance up into the weekly opening that resides right here, and then we have the engagement with the daily order block as well. And then we also have the engagement with the daily propulsion block as well. We have this candle leaving the range, displacing down below this low, projecting this low out in time. We have this candle utilizing this low to then continue that expansion down towards sell side, engaging with the August low of the month. And then a standard deviation is anchored from this high all the way down to this low, projecting for that monthly BISI high, where we have the -2, -2.5, and this is ultimately where the day closes overall. Now, taking a look at the hour one, simply just getting a lot more of an intraday perspective of what price action done over the course of the week. We have the weekly opening right here, and from the weekly opening, we have that consolidation during Asia. Then we have that London deliverance down towards sell side, and then London forming the low of the day, buy side delivery to engage with the premium half of the previous week's trading range, as well as the offset reaccumulation that occurred right here, as well as the daily order block that was engaged with. This standard deviation is anchored from this low all the way up to this high, and this would be your London standard deviation projection, and this is where the day ends up capping out at. And what we take a notice to is how sensitive price action is around the equilibrium of the previous week's range. So it's very shy price action around the equilibrium of the previous week's range. We then have Tuesday and Thursday's trading simply just being a consolidation with the point of inception occurring during Wednesday's trading, but we don't actually leave this point of inception officially until Thursday's trading, when a new point of inception is established during the Asia session. But in regards to Tuesday's price action, what we end up taking notice to is a 3-drive pattern being performed within this hour one imbalance. Then we have that deliverance back up towards buy side to simply just meander around during the Wednesday's trading. Kraken correlation was presented with the Tuesday high, so ES engages with the Tuesday high of day, Nasdaq fails to follow suit, Kraken correlation, but the point of inception was not all that clean. We end up seeing a signature presenting itself, but the following signatures do not present themselves in order for price action to leave in a very meaningful or willingful fashion. And the deliverance away from this segment of price action does not occur until Thursday's price action during the Asia session, in which we end up having this Kraken correlation. And this right here would be your Asia standard deviation. So from this high all the way down to this low, projecting it out in time, you have your -2, -2.5 projecting for this segment of price action, which aligns with the hour 4 standard deviation that we were looking at. And then we also have the -4, -4.5 projecting for the August low of the month. And during this deliverance down towards sell side, what we end up taking a notice to is it's rather high resistance. And reason why being is because we're going through a low resistance move. This deliverance up towards buy side was very low resistance. And we know that where high resistance prints, low resistance will print. And where low resistance prints, high resistance will print. So this imbalance enabling for this high resistance price action going down towards sell side, but nevertheless the premise and the objective is still going to play out no matter the type of deliverance that is unraveling out. And just before we end up having the Thursday's trading day collapse, what we end up having is this 1600 candle performing an institutional order flow entry drill into this imbalance that resides right here, and this then becomes an intermediate term high. And then we end up seeing Friday opening up, deliverance up towards buy side in a high resistance manner. It's delivering into this wick, and then we deliver to the consequent encroachment of that hour one wick. We see price action once again being very sensitive around it, but also the engagement with that previous week low that resides right here. So this candle right here engaging with our previous week low that resides right there. and then we have that deliverance down towards sell side, now in a low resistance manner. We can see that the price action is very willing to deliver down towards sell side. We're simply just piercing through sell side, and we're forming imbalances compared to this high resistance run that we were having right here. And the reason why we're seeing this is because we are now outside of the range in which low resistance had printed. So now we are allowed to begin printing in a low resistance manner down towards sell side. We have a standard deviation on the hour one, so from this high all the way down to this low, projecting for a -2, -2.5, which resides just above our August low of the month. And then we have the -4, -4.5, projecting for the monthly BISI high that resides just right there. What we take a notice to is that during this deliverance down towards sell side on Friday's price action, is that most of the sell side deliverance occurs before the 9:30 opening bell. So we actually have 9:30 opening within this segment of price action that resides right here. So an objective was met just after the 9:30 opening, and then we have this candle right here, which then forms an imbalance, and we see this imbalance being utilized in a very nice and efficient manner, no closure inside of it. And then we have the next candle forming an order block and then we have the next candle forming an order block in this segment of price action here, which is utilized in an efficient manner for that sell side delivery. Now, something that is to be taken a note of is the fact that price is fractal. The patterns that we see on the higher time frames are going to replicate themselves on the lower time frames. And what this segment of price action looks like right here is like our daily time frame. So what we were taking a look at on the hour one is very similar to what we have here on the daily, being a series of up close candles engaging with an imbalance that resides right here. And then we have a series of down close candles confirming this order block, and then the utilization of that order block to then continue that sell side deliverance. And that is exactly what we are looking at right here when we're observing this segment of price action. A series of up close candles engaging with this imbalance, very efficient engagement with it in terms of the candle closure, which is also very similar to what we had seen on the daily. And then we have the series of down close candles, well, in this case only being one down close candle confirming the order block, and then the utilization of it to continue down towards sell side. Now this would be a time-based PD array. This hour one order block, deem it a time-based PD array. Reason why being is because this up close candle that resides right here, it opens at 10 a.m. and 10 a.m. is one of our key time opening prices, and 10 a.m. would be the opening of the hour one order block that we end up seeing utilized. During the PM session, we have the engagement with that hour one order block for that deliverance down towards sell side. So that is basically it for the weekly review. Just taking a look at my chart right here. We have that deliverance into this black line, which is a monthly BISI, but I am not looking for this to serve as a point of institutional sponsorship. Reason why being is because it's not in a discount of the overall range. So in relation to the range, in fact, if we simply just go here and remove all of these because they serve no purpose anymore, and we just go on to the monthly chart that resides here. Right now, the range that we are currently trading in would be from this low all the way up to this high. And what we take a notice to is the fact that, okay, we have the equilibrium and then we have our OTE residing right here. And just under the equilibrium, we have a very nice imbalance that resides right here. So we have a perfectly planted discount PD array underneath our equilibrium. And we know that we are currently engaging with this imbalance that resides right here. I'm not looking for this to be utilized for us to then see buy-side delivery. Of course, we may see lower time frames utilize it for buy-side delivery, but I'm not looking for the higher time frames to utilize it as buy-side delivery. I would much rather see the discount BISI be utilized for buy-side delivery, and this may have the potential to end up forming the low of the month, because the low of the year. The time that we're beginning to approach this discount imbalance, we're rolling into the second quarter of the year. So if we are to come and engage with this discount BISI, In order for me to say, okay, we may have formed the low of the year, I'm going to look for higher time frame institutional sponsorship, which means I'm going to be looking for the inception model or signatures of the inception model to occur on the daily time frame and the hour 4 time frame in order for me to project out, okay, we have now confirmed the low of the year. If this BISI fails to be utilized for institutional sponsorship, it means that we may have quite a way to go down in relation to sell side, because in relation to the standard deviations, we have this daily one residing right here, and we have the -2, -2.5, which projects very nicely for our monthly BISI high, which resides in a discount. And we know that the -2, -2.5 is a point of reaccumulation redistribution or a smart money reversal. In this case, we're looking for a smart money reversal, which is why we're going to be looking for higher time frame institutional sponsorship. But if we do not see signatures of institutional sponsorship occurring in this segment of price action here, we may end up coming and look to engage with the OTE. And if the OTE ultimately fails to present signatures of institutional sponsorship, we would then be looking at a much higher time frame market maker model unraveling itself out. So we'd perhaps be looking at a standard deviation like this. So if we fail to see institutional sponsorship occur at this monthly BISI, the next segment of price action we'd be looking to see institutional sponsorship would simply just be this wick. This wick aligns with the OTE of our given range, so from this low all the way up to this high, and we'd be looking for this wick to offer us institutional sponsorship. We have the consequent encroachment of this wick aligning with the -2.5, and then we have the upper quadrant of the wick within the range of the -2, -2.5. If institutional sponsorship is not granted here, then a lot of sell side may be delivered to. But overall, like I said earlier, it's a lot more easier to take it day by day in terms of what the candles are printing. But of course, it's definitely ideal to have a couple ideas in mind as to how you want to navigate price action and what you want to see price action do. Because if price action does X, then I am going to do Y, or if price action does Y, I'm going to align myself with X. So, it's a lot more easier to take it day by day in terms, because right now we're looking at the monthly chart. We're observing the monthly chart. I'm an intraday trader. I'm trading the daily candle, and not even just the daily candle of its own. I'm positioning myself within sessions in a sense. But in terms of you want to have a grasp of what the higher time frame is doing, because if there is no knowledge as to what the higher time frame may be doing, it's very easy to get lost within the lower time frames, because you're going to be confused as to why a trade I've just entered is delivering in a rather high resistance manner, or why do external points of liquidity keep failing to be engaged with. Now, something that I am going to even touch on is the fact that, okay, if this monthly BISI is going to be utilized as a point of inception for price action to then begin delivering, and we have the low of the year forming, very expansive price action. All of this price action here is rather high resistance, and we have a lot of price action being built up here as well when we go down into the lower fractals too. A lot of price action. We're looking at a higher time frame TLP. These are the exact same signatures that I look for on the lower time frames when I'm looking to engage with price action. The only difference now is that we're looking at it on a higher time frame. We're looking at it on a much larger perspective. Right here we're looking at around 2,500 points on the Nasdaq, and we haven't even delivered to the range in which we believe that higher time frame sponsorship is going to occur, which is still another 1,500 points away, or 1,000 points to be exact, or whatever. But we're looking at a much larger scale of a point of inception right now. And we need to take a notice to the fact of how price action is delivering. Buy side is simply being what? Buy side is being engineered. Buy side is simply being engineered. Over the course of this week's trading, what I initially wanted to see was this high be engaged with. Yeah, so during the course of this trading, what I wanted to see was buy side being engaged with like this, and then we have that deliverance down towards sell side. But we don't have that buy side being engaged with. And before I keep yapping, I need to at least check. Russell also hasn't, well, has it? Okay, Russell also hasn't engaged with it. I just wanted to make sure before I kept yapping on with, false knowledge or whatever. So, what I wanted to see was ultimately price action coming and engaging with this candle's high, and then we have that sell side deliverance. Because what this is, we're forming a bull flag right here. So, the idea I had in mind is okay, we have that expansion, and I'm pretty sure I did this in one of the analysis videos, but we have this expansion, and then what we end up seeing is we end up forming a bull flag. We end up forming a bull flag. And what retail likes to see is price action then trade above the high of the bull flag, and then we end up having an expansion up towards buy side. Except in a scenario as to which we are bearish on the higher time frames, this is simply just going to be a form of manipulation in order to have the pairing of orders for smart money, and then we can end up seeing that sell side deliverance. A point of inception would occur above the bull flag high. So instead of price action coming and engaging with the bull flag high as a form of support and then we continue, we're simply just going to form a point of inception and continue down towards sell side. But we failed to do that. We failed to engage with this high across all assets, ES, YM, and Russell, which is an asset that I rarely look at. And you know what, now that I'm even thinking about it, the only times that I even look to think about Russell is when I am framing higher time frame narratives or higher time frame ideas or whatever, because that's why I had to go and make sure in terms of, okay, did Russell take it, X, Y, and Z, da 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 da. But besides all of that, we failed to do that. We failed to engage with that high. The engineering of that, it's the engineering of that buy side that we're looking at, which is what leads me to believe that the point of inception may be occurring for higher time frames for the low of the year rather soon, in terms of if we come and engage with this monthly BISI, it may be a point of inception for price action to deliver up towards the buy side. And we're going to confirm that by seeing the signatures occur on the lower time frame. So since this is a monthly BISI, we're going to look for daily signatures. We're going to look for hour 4 signatures. And at the very least, we're going to be looking at the hour 1, but with the framing of the daily. So we're going to be utilizing that time frame alignment if we're going to be looking at the hour 1. We're not going to find the point of inception for on the 15-second for the low of the year. Yes, we may get the trade for the low of the year on the 15-second, but the idea is most definitely not going to form on the 15-second. But besides all of that, simply just overall, we're just engineering. We're just simply engineering buy side, and as well as the fact that we have to take into a consideration of the time that we are doing this at. So we're rolling into the new quarter of the year. So there are certain things that we are going to be taking a look out for in regards to the economic state of the world. Something will occur in the world in order to shift the narrative or sentiment of the general public. So right now, price action is very bearish. And you see, I love the way price action is delivering right now. I'm saying this under the speculation that, okay, point of inception may occur at the monthly BISI high. If this is to occur, I love the way price action is printing right now. Reason why being is because it looks heavy. It looks heavy. We had all of this consolidation right here, and all of a sudden we have douche, douche. And I'd love to see a continuation of this douche, douche, simply just heavy sell side deliverance, because this is putting the general public into stocks are going down, the market is crashing, X amount of money has been lost in this period of time, X, Y, and Z, da 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 da. So while everyone in the market is looking to, panic sell, or everyone in the market is taking out their positions or doing whatever in God's name what they're doing, that is when we look to buy. And it's going to be aligned with the economic state of the world. And unfortunately, it's going to come at the cost of lives, because the world we're currently living in right now, there's constant war, there's constant talks of war. And of course, prayers go out to all of those who have lost their lives or people who are in danger. But there is going to be statements said in order to shift the direction in which price action is currently going in. There's going to be statements said in order to induce more fear into the general public of the market, all while this is an opportunity to actually indulge, all while it being an opportunity for price action to then begin delivering up towards the buy side, all while a point of inception is actually occurring on the higher time frames for that buy side delivery.